Welcome to the Latin Wealth Podcast, a podcast dedicated to educating the Latino community about entrepreneurship, investing, and business.
Yo, what's going on, Latin Wealth family? Welcome to another episode to Wealth Wednesday. Super excited about today's episode. First and foremost, I'm happy to be back at my home setup. I know last week I was in a hotel. My audio was, a little janky, but we made it through. We're back home. I'm glad to be here, whether we're in the studio or back home. Yeah, so we're gonna have a great episode today, have a couple dope topics. Number one, we're gonna be talking about El Salvador and their Bitcoin city. We're gonna be talking about their Bitcoin city actually secures a $1.6 billion investment, the largest private investment in the nation of El Salvador's history. We're gonna be diving into what that investment involves, and we're gonna be also talking about the economy. Last week we spoke about how the economy was affected by Japan. We're going to solely focus on the United States today, as we're going to be looking more into why investors are more confident in soft landing as Fed rates expect to rise in the United States. We're going to be diving into that. And as always, my brother Jeremiah, how you feeling today?
Feeling great. And it's good to see you back in your home settings.
Man, it feels good. It feels amazing to be home. Let me say that. So, but let's dive into it. So, a $1.6 billion investment could revive El Salvador's Bitcoin city plan. Now, if you guys don't know about El Salvador's Bitcoin city, I'm going to break it down just a little bit so you guys can get an understanding of what's going on. President Bukele announced the development of Bitcoin City back in 2021. All right. So just a couple months after the cryptocurrency became a legal tender in the country, they announced that they're going to basically create the city that's going to have, entertainment, homes, and a bunch of stuff. It's going to be an actual city, right? And it's going to be everything's going to be taken in by Bitcoin. You can pay for everything with Bitcoin in El Salvador. Now, it was recently reported by President Bukele that a Turkish company, Yilport Holdings, will invest $1.6 billion into that city. Now, again, this city was going to be completely ran by Bitcoin. And some of the incentives for being in the city is people that were going to be there are going to be exempt from all taxation. And this is one of President Bukele's most ambitious project. And ultimately, the goal is to increase trade with El Salvador. So huge investment from a Turkish company where they're going to be partnering with El Salvador pretty much to develop this city and to get the get the project going again, because it was halted in 2021, but they want to get it going again. So the project would unfold in phases, and starting at the end of the year, it's gonna start. They're gonna break ground and start. It's crazy. They are actually developing the city near a volcano, which I'm sure that we'll get into as well. But Jeremiah, what are your thoughts about this? How are you feeling about this, man? It just seems like El Salvador, they're making a lot of interesting moves and a lot of moves that's going to progress the country as a whole. And they're being aggressive with it.
I looked at, and I don't know if people have seen this, but if you haven't seen the videos of Bukele, he's a pretty viral guy, and he's extremely intelligent. I actually watched him break down the U.S. economic system, which is pretty accurate, strangely. And then he broke down the tax system, right?
And he's young.
Like I think,
maybe?
Yeah, he's 42. I mean, I think that the basis of how, which is totally opposite of what we do here, right? It's all the politicians are pretty old. I believe that the structure of El Salvador and him placing and getting this influx of money from Turkey, this is going to be huge for El Salvador. Now, what I looked at though, when I saw Turkey put that money in, or a Turkish company put the money in, what I thought about was the lack of, I don't know, maybe a missed opportunity on the part of U.S. companies
Mm,
And the reason for that I believe is because that these companies didn't want to give that pat on the back to Bitcoin. We're hanging on to the dollar. We're trying to still strengthen the dollar, so we don't want to go with that alternate source of
hmm
Bitcoin and things like that. Some people will be like, "What Trump is saying is the greatest" or whatever. I think that's politics, but what I'm going to say is that I think it's a missed opportunity, and I think it's great that Turkey, put the money in, and that helps. I mean, this is just going to strengthen the trade relations between, El Salvador and Turkey, because obviously Bukele he's looking for engineers. He's put out stuff for people to move to El Salvador, and he would pay them, and help people to move there and stuff like that. So this is like a full holistic approach. And getting this funding is going to kickstart something that was halted in 2021 during the pandemic to now get it back started and make this a reality. And I think that city is going to bring um, additional foreign people, foreign dignitaries, foreign money, countries, companies as well to invest into El Salvador. Imagine a
Right.
resort in that city that's built, you know,
Mm,
based off all BTC. And if you come from other places, why is that great? Because then you don't have to do currency exchange. It's going to
mm,
strengthen the economy of El Salvador as well, because you don't have to worry about that exchange rate and inflation in your economy, right? And your currency losing value to wherever the person's coming from, Europe or whatever. So it's yeah, it's it's a great move, and it kind of just makes me wonder, like, dang, why didn't a U.S. company do that? Everyone's heard him. I mean, Bukele, he's obviously put that out and promoted that this is what he's going to do or whatever. So it just kind of made me kind of wonder, how come we didn't take that opportunity to do it, or a company from the United States? So
yeah, that's a very interesting point. And this Turkish company, they also have investments in Guatemala, Ecuador, Peru, and in Europe as well. So they operate different ports in these countries. So yeah, I mean, I'm not going to sit here and act like $1 billion isn't a lot of money, but someone like a Google, an Apple, or something like that, they can put that
sure.
up, and I think Google actually also this year they opened up some offices in El Salvador. So they're
Yeah.
already planning it out there as well. So that is interesting.
Yeah, I feel like it's a no one wants to give that. And what's strange is that everyone waits to see what Jamie Dimon is going to say at Chase, because Chase is the biggest bank in the world, right? So everybody kind of waits to see what he's going to say. It's what BlackRock does and what Chase does. So those are two very influential companies, and voices in the way people move. So I don't know. I think it's kind of weird that a company, especially Google, like you said, they're opening up offices. You got, a headquarters in Central America and El Salvador, but you didn't think to invest. And like you said, $1 billion, honestly, for companies like that, that's not a lot of money. And
Mm.
it would have been a tax write-off probably. So
Yeah.
I don't know, kind of weird,
Do you
kind of weird.
think
Nobody
some
wants to take that plunge.
I was going to say, do you think some companies in some countries as a whole, they see this whole thing with El Salvador as an experiment? They want to kind of see what the results of it are. What happens is, are they going to fulfill, because they've been talking about it since 2021 and they haven't even broke ground on it,
Yeah.
So are they kind of like stepping back and seeing like what's going to happen and maybe they'll invest in a different country like Panama?
I mean, obviously Panama has a little bit, a higher established GDP and things like that, but that's because, I mean, it was America up until 1999, right? So there's stuff to think about. I think that other countries may be doing that, but I also think that there's external features and things that are hurting them receiving money from other countries and stuff. For example, Akon, who is going to
Mm,
supposedly run in his city, right, with crypto and other things. It's a futuristic, it's supposed to be like the real Wakanda or whatever. And they
mm,
said there's like goats and sheep and stuff, and
yeah,
it's not even happening. Like,
it's
and the
dead.
country basically said, "Bro, you're gonna lose your land. We're not gonna,
Yeah.
hold this land for you anymore. You haven't even done
He,
anything." So
he's got like
stuff,
towards the end of the year or something like that to make a
yeah,
move on it or to make do
exactly. And so I
something.
think
Yeah.
stuff like that starts to deter people.
Mm,
Um, but I think there only just needs to be one vote of confidence, right? And the thing is just like in the Olympics, which are, just ended or whatever, America is dominant, but you start to see the rest of the world catching up. So it doesn't have to be an American country. So it was a
for sure.
Turkish company. and or you get a company from Saudi Arabia that believes in them, or UAE, and then things change, and so different alliances, and you got to also start to think about where these companies come from. If they're aligned with that country or they're owned by the country, then that's a direct connector, a direct connection or relationship that builds with El Salvador in that country. So if you're thinking politics, or you're thinking, geographical, socio-political, geographical stuff that's going on, then you got to think about, dang, that relationship is now built with, this country, and we didn't even build that relationship. So I think about all those things, and how this is moving. Um, and also, I also think about, people that forget about that Bukele's his heritage or his ancestry is Arabic.
Mm,
I believe it is. So just different things I think about from different features, and maybe that deter people. There's all sorts of stuff, but I think we'll start to see if they can complete it and all the funding goes through the way that it should be. I think that you'll start to see some companies and some people kick themselves that they didn't jump
mm.
in on it.
Yeah, 100%. How do you think this affects surrounding countries in Central America? For example, like let's talk about maybe Panama. Like this, is this going to create
Right.
maybe some friendly competition? You got ports, two major ports being developed in El Salvador, Bitcoin City.
Yeah.
what do you think about that?
I think it's good. I think that we talked about the Latin metrics of the companies and the way they're growing. Panama is one of those countries that are growing, right? Their GDP is growing. We talk about Argentina all the time. So I think that it'll create some competition, but I also feel like Panama's been so far ahead for so long
Mm,
because of their relation with the United States. So maybe this is just El Salvador catching up. And it's good for the region. It's actually good to have that competition and for other economies to be stable in that region, because now it starts to build just America as a whole, right? Because people think America's United States, but that's just one part. There's Canada,
mhm,
there's Mexico, there's Central America, so it makes America stronger. That's how I look at it.
mm. Yeah, 100%. I mean, look, I like this move. I'm a fan of President Bukele. And
Me too.
I like that he's almost a radical. Like he's coming in and he's being aggressive with these ideas and these plans. We talked about, how, El Salvador has become a safer country as a whole compared to what it was just 8 years ago. And that all is part of his plan, So I'm really hoping that they execute on this plan. We like you brought up Akon City, or is it Akon City or Akon Country? Akon City.
It's Akon City.
One,
Yes,
yeah,
Akon
yeah.
City.
But and it's like that was a very ambitious plan, and unfortunately, I don't. It doesn't look like it's going to go through. But they actually made it. El Salvador actually made a deal with a Turkish company. So
I feel like and hopefully this goes through if it's not blocked. There's other things that come into play too with the economies and things like that
yeah.
you'll end up having. If as long as it's an open runway and they have a clear path to make it happen, then I believe it'll happen. But you have people that are trying to make sure that the dollar stays strong and
Mhm.
starts to sabotage stuff, then it might be a little difficult. And I think
Yeah.
Akon ran into a lot of that actually.
Mm. Something else that's interesting is um the thermal energy that's going to be coming from the country as well. So it's going to be, I mentioned that it's going
Yeah.
to be built
Yeah.
by a volcano, which is going to provide clean energy for Bitcoin mining. If I'm not mistaken, they've already tested some Bitcoin mining at a different volcano, and I think they mined about $20 million in Bitcoin, if I'm not mistaken. I have to fact check, get the facts on that, but I'm like
Yeah.
90% sure I was reading that.
Yeah, I mean, and that's always an issue that we always talk about, because us switching over to, you know, um, a non-fiat currency or something that's on the blockchain, you always think about the mining of those assets, and Bitcoin mining is a dirty game. We've
Mhm.
known that for quite some while because the servers and everything take so much energy. So if you can come up with geothermal energy and it's clean, you don't have to weigh on the environment, and right.
100%, 100%. Yep. So we're gonna keep an eye on this as always, and we'll keep you guys in the loop about what's the progress of El Salvador and on this plan as well. And we're gonna transition a little bit, and we're gonna be talking about what's going on in the economy today. Investors are more confident in a soft landing as Fed rate cuts expectations rise. All right. Investors are increasingly confident that the global economy will achieve a soft landing. So 76% of respondents in a survey said a soft landing is the most likely outcome for the global economy in the next 12 months. This marks the highest percentage of respondents projecting such an outcome dating back to May 2023. And expectations that I think it just actually came out today that the rates are going to be cut in September, and you can expect rates to be continue to be cut in 2025. And they also mentioned possibly one rate cut in 2026. What are your thoughts about this?
So I want to start with the narrative that the soft landing thing. We've been in a recession probably for the past 2 years. They don't speak on it, but by all definitions of a recession, we've been in that. The market they felt wasn't responding accordingly, but everything else, inflationary wise and economically, was responding in that way. And 26% of people believe that it's going to be a soft landing. That was the that
70,
was the that was the
76,
stat.
76.
76%.
Yeah, yeah.
Okay. I thought you said 26. I was like, that leaves a whole 70 something percent of people. I was like, no, that's super low. Um, I think that a lot of people in themselves as well, if you're not reading, you're gonna listen to whatever somebody tells you.
Mm,
Um, but being somebody that actually studies the economy, and I'm actually like, that's my job, that's what we do, dealing with money. We've been in that for years. So I get what they're saying, soft landing wise, but it looks different. You'd have to study the way that the inverted yield curve, it's been inverted for a little bit and then it inverted itself again. You'd have to look at how long this thing stretches out, because when we had the recession in 2008, it took a sharp dip, right? And then we started coming up after about a year and a half. This just may be stretched out, like we talked about last week. It's just stretched out over a longer period. So it doesn't seem like it's as detrimental, but it's actually more detrimental because you're on a low side of the cycle for a longer period of time. It was just more gradual.
mm,
So you didn't really, instead of that sharp dip and then you come back up, it was just, gradually going down, and then you don't come up as fast either. So I hear people, but I think it's a lot of it is just a narrative that they hear. Rate cuts by the Fed, that's going to be something positive. People are looking to get into houses. Um, Obviously, it's expensive to borrow money right now. People looking at purchasing cars, all these different things that you do that costs money, or you have to borrow or finance something. Then hopefully that puts it in a more
mm.
positive, a positive space. We'll see how it does with the economy though, because they feel they were confident that they can lower rates now because they started to see unemployment, spending essentially.
Hmm.
Spending went down. So when they see spending going down, they're like, "Oh, okay, people are running out of money. We're right. We're accomplishing what we were trying to accomplish with these high rates, which was slowing down spending. So now we can come down a little bit and start to let it level out. We'll see. 26 and 2026, the tax structure changes. We go back to pre-Trump taxes, and that adds an additional quarter, so additional 25% to the taxes that you pay. So that's going to be interesting. We'll see if the rate cuts can outpace that, or will that be, because for me that seems like that would be more of a deterrent to spend and stuff like that. So we'll see. I'm interested.
Yeah, no, I'm very interested because I'm a little confused as well, I should say. Um, because you got high home prices. Supposedly jobs are being added, and this can all be a narrative, right? And my thing is, what's going to happen when they cut rates aggressively when money is cheaper to borrow? People, I don't think
Mhm.
credit card rates are going to go think the average right now is 24 to 26%. I doubt they're going to drop down to 15, maybe
Mhm.
down to 20% or something like that. But you don't think if it's cheaper to borrow money, is this not going to reignite inflation once again, especially if we cut it aggressively?
No, it just keeps us. What it does is it prolongs the stagflation, which is what we've been in. Inflation got up to a certain point, and if you notice, it just starts to it teeters,
Hmm.
right, and it stays
Yeah.
between this basic like a box, right? We're in the
Hmm.
same cyclical up and down, but it never really goes above a certain level and doesn't go below. Same with housing prices, all these things, it's just up in that very cyclical. So what happens is is the norm starts to become 5.5, 6% on a 30-year fixed note, right? So it's more expensive. It's still more expensive. Yeah, it dropped, but now it's more expensive overall. So I can't say that people are going to be spending more. I mean, I guess they could. That's what they're thinking that's going to happen. But what if housing prices go up?
Hmm.
Rates come down, right? So you're paying
Hmm.
6.5, 6%, but the median house costs continue to rise, then it really doesn't matter.
Right.
So you just stay
Right.
stagnant
Mm.
for a long period of time. That's just stagflation. And most people would rather have, deflation or inflation. You want to either see stuff going up because you know how to fix it or going down, right? Because you know how to fix that. But when stuff just stays the same, no matter what you do, it's a bad place. And I
Hmm.
think that's what they're avoiding talking about is the stagflation.
Interesting. So just to review a graph that I came across, it basically breaking down where inflation is and
Mm-hmm.
where it isn't, pretty much breaking down a 12-month change in the price of certain categories. So where inflation is, auto insurance is number one
Yep.
at
Yep.
18%.
Crazy.
Number two is rent at 5%. And then one of
Mhm.
the lower ones is groceries, it's 1.1%. Now, where it isn't, one of the lower ones on the list is used cars, negative 10%. All right.
And
Rental
that's
car, go ahead.
yeah, okay. No, no, go ahead. I'm listening.
I was gonna say rental cars, negative six. Let's go to gasoline, negative 2.2, and then pet products, negative 1%, 0.1%.
The used cars is as the economy, right, recovered from logistical stuff that we had during COVID.
Right.
It's going to cost less for the metal and stuff like that. The chips are getting into the cars and all that stuff. So obviously that was naturally going to go down. And as you have an influx in AI and all that stuff, so metal and chips and those things of those nature, it was offset by the gains basically that you had in that sector. Rent, it's crazy they don't have housing costs on there. That's why I'm sitting here and I'm like, it's the
They
narrative.
they do
There's no
they
way
do well, it just
they
says
do.
housing. It doesn't say housing costs. It says housing 4.4%.
Okay. Yeah. You see what I'm saying? It's like it's the narrative here,
Yeah,
man.
yeah,
It's really crazy. It's the way you present things. You can make anything
for
the way you
sure.
present. And there's no way groceries are only up 1.1%. What is the time period that they're talking about? A
It
year?
says, yeah,
You believe that?
I don't, but it's just coming from Yahoo Finance.
Nah, I mean, if I say groceries, what is groceries?
Let me see. I just read it. I'm not gonna even say it.
No, 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 no. Say it, say it, say
It
it.
says 1.1%.
That's what I'm saying. That's what I'm like.
No, and
We
that
all
you yeah,
know.
you're 100% right. You got a point. You got a point. I'm just reading the numbers because I had asked right before we hit record, I asked my wife, I'm like, where do you see have you seen inflation come down in any place of your living or whatever? She basically said, heck no, hell no. You know what I'm
No,
saying? Like,
no. Especially
um,
not in groceries. Only a
yeah,
1% growth, man.
100%.
Eggs were freaking. Come on, man. Like,
Yeah.
and if I took out the most expensive products in groceries, if I removed those and said everything else was groceries, then yeah, right. But I'm gonna take out the meat. I'm gonna take out eggs, milk, right? Like those were things that were
Hmm.
super volatile and they went up along. And these are just basic needs and basic necessities that we eat and use so much of. So if I took that out and we said everything else is groceries, toiletries and stuff, then yeah, probably so. But I think that's just a narrative. We'll see the real numbers after the election
Mm.
because then it'll be looked to for whoever won.
Yep.
They'll be the savior, right? So
Yep.
next year they'll come out with this great plan. This is what really happened, blah, blah, blah.
Hmm.
So we'll see the real numbers after the election.
And this is why I said I was confused. This
Yeah,
is exactly why.
I'm out of there. I don't the groceries got me. The groceries got me.
Hmm.
1.1%. Yeah. They don't even include that in inflation stuff because it's so volatile. That and utilities, they
Hmm.
don't include it.
Yep. And then earnings. This will be the last one. Earnings, it says 3.6%.
Increase?
Yep.
Okay.
Yep. So
You agree with
it,
that?
no, I definitely don't. And this is coming from the Bureau of Labor Statistics. So
And the jobs that they added were all tertiary. These were like servant jobs. These are service jobs.
mm,
Bottom level construction working, McDonald's.
yeah.
Like that's great. And no offense to that or anything like that. You got to work, you got to earn your living. I'm not talking about that. I'm just saying those aren't the jobs you're thinking or that
Mm,
we think of
right,
professional jobs,
100%.
tech.
You're right.
Like and we know that's true because you go and you can look in any time in Yahoo Finance and you see Google laying off, you see Oracle laying off, you see all
Hmm.
these the companies that are the basis in professional industries, they're laying people off. So yeah, everything can be everything can be skewed. If you want it to be skewed, you can turn it and make it into, create the narrative of whatever it is that you want. That's what I'll say. Um, those of us that are out here living and working, we know the real. I'm like your wife.
Yeah.
Hell no, I ain't seen nothing. So
Okay, okay,
uh,
so let's I don't want to leave the audience in confusion like I am. Let's let's give them some practical steps. What should they be focused on in this time? What should they be doing? Obviously, number one thing we always preach on this channel is do your due diligence, research, even looking at numbers like this,
mhm.
and seeing if you agree with it or if you don't, right? I think this is all important research to understand what's going on, and like you said, to understand what the narrative that's being put out there. So let's
Mhm.
give them just three practical steps that they can take after this episode to deal with this information.
Number one, you're gonna always want to have a basis of savings. And what I mean by that is, guys, you want to have at least, and this people go back and forth on the number,
Mhm.
at least keep you 6 months. Work towards that 6 months of your monthly expenses. Try to save. And if people are like, I'm barely making it week by week, do what you can.
Do what you can.
Establishing a savings and creating that discipline for yourself, that's number one, because regardless of what the inflation goes up or down, you want to have some type of cash basis in case something happens. Most people are just one emergency away from being out on the street.
Mm,
So that's number one, set, budget savings. The number two thing that I would say, excuse me, is if you're in a place to do so, if you can do so, guys, start thinking about how to make your money work for you, right? So we started saving. Now you can't, right? Because most of us work or give our time for money, so we don't have more time because there's only 24 hours in a day, right? And you want to spend time with your family. So we have to learn how to make our money work for us. Whether that be you instead of leaving the money that you're making in your bank or that you have in a bank, putting it in a CD, put it in a high yield savings account, right? Or even like we talked about in several episodes back, learning how to invest and learning how to make your money work for you while you're working. Okay. The third thing that I would tell you to do is be educated. We
mm,
talked about due diligence, but continue to educate yourself, whether it's Yahoo Finance, watch where you get your news from, but whether it's Yahoo Finance,
mm.
whether it's you're reading the Wall Street Journal, but to continue to develop yourself on the aspect of finances. Don't get left behind because if you can't make the connection and realize when you read something what that means for you and your family, then you're already hurt and you're already behind the eight ball. So those are the three things I would say.
If I can just add in, those are three great steps. I would love to add in like a step zero.
Yeah, bro.
let's just say like you need to develop income, you need to bring in more income, figure out ways to start a side hustle, figure out ways to
There we go.
buy and sell, flip. These are different things that you can do to start, building up that saving or building up a different stream of income to come in to help you out. Right. So I'm big on that. I'm big on like finding different hustles. I'm big on, utilizing the skill set that you may have, even if you're working a job. If you've been working a job for 10 plus years or whatever, you have developed a certain skill set to be there. Chances are you can take that skill set and you can sell it to somebody else. You can package it up and sell it to somebody else to bring in additional income.
For sure. I agree. So step zero is develop you a side hustle or develop those skill sets into consulting or something that you can get paid off of.
Hmm. Yeah, 100%. Cool. Love it. I know this was a lot of information today, but hopefully you guys can take note from this and continue to, just develop yourself overall. This is the reason why we put this show on every single week. And we want to continue to help y'all out. We want to continue to leave a positive impact on our community. So if you guys have learned anything from this episode, if you guys want to show your appreciation for our consistency and the time that we put into this show, it would mean the world if you just share it with one other person that needs to hear this information. Also, if you can subscribe and like, it would mean the world to us. And on that note, it's the Latin Wealth family. We'll catch you guys next week. Peace.
Peace, guys.